Oh, you watched the overview of support resistance? Yeah, that was for Mikey, huh? Did anybody else watch the overview I did at FX Street about support and resistance? I did that on Friday. YJ, yes. Mark, yes. Oh, Igor is an eye opener, huh? Good. Yeah, I've done it 100,000 times without a doubt. It's been archived and recorded every time. Yeah, Tim watched it over again. Yeah, cool. Well, I've always thought that was the number one thing you have to have is a strong capability of support and resistance. And of course, I shouldn't say that's the first thing. The first thing is having the patience and discipline to let it happen, because you could be great at identifying support and resistance, and you could also be fabulous at not trading it. Right? So you got to have the patience and discipline first. So. One question: how thick is the rectangle you put? I'm not sure what you mean, but anyways, let's get going. Dun, 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 dun. Good morning, everybody. Welcome to the show. My name is Wayne McDonell. I'm the Chief FX Strategist for TradersWay.com. Thank you for attending today's event, and thank you for being a client of TradersWay. Over here, we like to trade Forex, energies, metals, indices, and binary options. These sessions are Monday through Friday, 7:30 in the morning. They last about 70 feet. Monday through Thursday, they're available in your TradersWay.com back office. So you need a demo account or a live account. And then every Friday at fxstreet.com. Today is a Monday. What we're going to do today is cover Commitment of Traders report. We'll review the calendar and look at risk events for the upcoming week, and hopefully do some trade plans. So I hope that works well for you. Hope that fits your agenda just nicely. Let's start with technicals, and then dive into the fundies, and then we'll come back to technicals, right? This is Euro USD. This is a 15-minute chart. You can see looking below. What do we do now? Well, not necessarily. Yes, resistance. Yeah, Justina says sell. Well, no, not necessarily. But you mark it up as resistance for a future, maybe a sell. Yeah, roll reversal. Maybe a sell soon. Mike says it very nicely. Yeah, necessarily a sell. But that's where you would expect it might occur. Okay, and the timing based on the stochastic says, yeah, maybe soon. Yeah, this might be it. This could be it. We've wasted a lot of energy just to get to resistance. So now that we're here, the upward move is sort of out of steam, and yet we've only retraced 50% of the last move. Okay. What does the 55 tell us? Since we're through this 21, what does this tell us in here? Yeah, I better keep the trade the news going. Yeah, possible double bottom. Don't expect a lower low, I guess is what it says, is another way of looking at it. It might do it, but you shouldn't expect it. It wouldn't be founded. What about the higher time frame? Does that say up or does that say down? Okay. Yeah, look down. Very much so. Depends. Never say that, Armin. Never say that. Because what will happen is you'll get caught and you'll never be able to make a decision. If you're a bear, it will go down, Armin. That's it. Because you've made the decision. You're a bear. So your bias is down. And in this case, it's making a series of lower lows and lower highs. So you have to, you can't say depends. You have to be on one side of the fence or the other. Okay? So you have to say, that's bearish. I'm a bear. That is bearish. We're making lower lows, lower highs. It doesn't depend. There's nothing depend in that chart. Okay? And if you're a bull, you're waiting for a reversal pattern to buy, right? Is there a reversal pattern there? No, not really, not yet. Okay? Now, if it double bottomed, so a bear would want it to, a bull would want it to come down a little more and then head up. Or a bull, let me change colors here. Let's do whatever that is. Okay. A bull, let's say it did go higher, would want it to come up and make a higher high and then come down and then buy it. Those are the two things a bull would be waiting for. Okay. So it doesn't depend. It just hasn't reversed yet. So there's nothing for you to do. But everything on this chart is down at the moment. There's nothing depends. It's just down. So here's what we talked about on Friday. Plan was we were way down here, then that we'd come back, retest this old neckline, and then down. Okay? At the time we were talking about it, you know, the oscillator was way down here. Terrible time. Right? So what we wanted is way overbought near resistance. And then we defined resistance as either dynamic levels of resistance, price action levels of resistance, market levels of resistance, which would be the pivot points, so on and so forth. Whatever your alpha, that means whatever you use to identify resistance is up to you. They're all right and they're all wrong. Just use something, gold, dang it. Okay. Some people might have used the daily central pivot point as resistance. You see the time frame? Okay. So it's Monday morning and you see the 4 hour and the oscillator's like coming down and price has made a lower low and has pulled back near, not at resistance, but near it. Significant retracement, right? What would you want the 15-minute chart to look like pre-London? An hour or two before pre-London. Yeah, Mike's right. It didn't quite get there. Well, it depends on what resistance you used. It got to the moving averages. It got to Fibonacci. But I wanted to share with you one more important thing. Time of day. Okay. Time of day. This little area here is pre-London. Mike says it didn't quite get to resistance. Look, it hit the daily central pivot point 1, 2, 3, 4, 5, 6 times and never broke above it. So almost 2 hours we sat at the daily central pivot point. Incredibly overbought right at the London Open. He already did it on a 4-hour that this is bearish. No, it's not a problem, Mike. You're always going to be, not you, but everybody. I mean, there's different levels. There's different definitions of what support and resistance is. It's fine. They're not all always going to be accurate. You need to pay attention. Yeah. So you look at it, you're like, well, I wish it would go up a little higher, but I'm going to take a shot on this 15-minute chart because, you know, this looks so good here at the daily central. And I like the oscillator. You know, the hourly chart was terrible, right? Because the hourly chart, the oscillator was like this. Well, whatever. You win some, you lose some, right? But if on this chart, you know, we look where resistance is, guys. Let's mark it up in a different way. Let's go back. I like this blue. What is it? What color is that blue? What would you say? Cayenne. Cayenne seems like it could be hot peppery, but no. Okay. It's not bad. I mean, look, was resistance, right? Resistance, resistance, resistance. Then we broke above it. Support, 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 support. Then we broke below it again. Resistance, maybe? You know, I would have wanted it if I could control this thing. I would have wanted it to go a little higher to this area to sell it. But it only went to this area, and you know, okay. Oh well. Yeah, I saw that, Igor. Okay. There's rumors of a Greek accord. I very much dislike when the market behaves that way. Because, you know, some idiot said that there could be an announcement, so the euro spikes, and then another idiot's going to come out and say, no, there's no announcement, and it's going to come back down. I don't trade that way. Remember, I base my trading off of global macroeconomics, not rumor. Right? There's a difference, right? So the market jumps for 3 minutes. Great. So yeah, not the world's perfect setup, but you know, it was quite good. I'd give it a B+ setup today. Yeah, it dropped right into London lunch. Okay. So the question is this area going to sell off now? Okay. Is that what you want to do? I mean, you have to ask yourself, is that your plan? Okay, how many people already had this marked up? That was their trade plan. Okay. Okay. Igor says it can double top. Let's explore that. For double top, you mean off of yesterday's high, or do you mean like this pre-London daily central pivot point stuff? Okay, let's talk about that. If the market does that, and let me change colors here. If the market is this, then I'm going to buy a dip. So to me, it's not a double top. So my plan would be have it come back down to the midpoint psych level around the weekly central, let's say 101.50, and then I'm going to buy it and take it up to that level. Now, why would I do that? Yeah, 100% retracement is not a retracement, it's a reversal. Doesn't happen very often, but it certainly can happen. Right? So if we go from this high to this low, back to this high, okay, not expecting it to come all the way down again. We're certainly not lower low. I'll be cautious. I mean, it could. I mean, you could range trade it, but if anything, I think it'll come down to this, okay, is what I'm talking about. And we have ourselves an inverse head and shoulders. So I don't think that way. I try to preserve the trend. So I'm going to be a fighter here. What I'm trading is the high, the low, and the lower high. I'm not planning for that. If that happens, I have to change my strategy. But my plan is to bring it down here. Okay? And sometimes, like if I'm wrong, sometimes I just sit here waiting and it goes, and I wasted the whole, now I'm up here, but now I can't buy it. So now I got to wait for an, and it's got to come up. So I'm thinking Shanghai Open now is going to be my next opportunity, right? Oh, well. Okay. You see what I mean? So I don't want to even think a retracement that far. Okay. All right. So what? Let's do calendar. These are the important event risks of the week. Busy week, eh, Brew? Let's see, German CPI. Let's get rid of that. Show filter. Do I want to do all that? Well, I'll leave it, I guess. All right, some inflation data, but see, we're not interested in that anymore. Okay? Because we have quantitative easing, so we're fine. I mean, whatever. I mean, if it comes 2%, all right, forget it. They're going to kill QE. But there's nothing that could possibly happen that would overshadow what else is happening fundamentally. Okay, it's just another economic indicator. It doesn't necessarily mean fundamental analysis. Now, maybe you get a spike out of this to scalp. I don't think so. So I don't care that much. ISM, very important because it's used for NFP modeling. Okay. Also, I like to use ISM manufacturing specifically. I like to drill down to their employment subcomponent of the report. I like to look at that and the trend and change in trend, and the velocity of the change in trend, to discern how monetary policy is affecting the average Joe. Does he have a job? Is it a good job? Is it paying? Okay, that kind of stuff. So that's cool. We want to see a good number out of there, but I wouldn't freak out about it. How about Aussie interest rates? Yep, could be a good one. Remember, we were at 80. Now we're at 76 again. Easy peasy lemon squeezy. Yeah, of course they're not going to raise, and in fact, they've been preparing the market to lower it even further. 2%, by the way, is the all-time low. I think the all-time low used to be 2.25. Like 2 is really low, and they're thinking lower. Okay, but you've already heard all my speeches about when to buy Australia and all that kind of stuff. So that's going to be easy money, just not this year. Eurozone CPI, yeah, more important than the German one, I think. I don't know. We just want to see if but is it going to be a big scalp or anything like that? I don't think so. But we are interested. Like for example, positive numbers now would be great. So I think that'll be a nice little scalp. GDP out of Australia, sort of more of the same, right? Just another. If you had back to back, like if you had RBA cuts interest rates and then GDP comes out negative, perfect storm. I don't expect any of that to happen, but we'll see. But again, another scalp. So you got a lot of scalps going on here. Like looks like a lot of euro scalping and Aussie scalping. I'm a bear on both of those currencies, so maybe it sets things up, right? Cool. UK PMI, yeah, okay, yeah, watch it. It's a service sector. Watch it again. So, the third, what is that, a Wednesday? That'll be fine for a short-term scalp, but I think it's going to be overshadowed very quickly by the ECB interest rate decision. So again, it looks like a small scalp coming up on German CPI, whatever. Then the next one is Eurozone CPI. Okay, another little scalp. Easy decision, huge scalp. Okay, huge scalp. Watch the press conference. If there's a press conference, watch the press conference. You should write that down. ADP, another dumb prediction. That's really good. The scalp on ADP. By the way, Germany CPI just came out. 0.0 over year. I don't have the month over month yet. Delay. Oh, 0.1. Totally as expected. So this one, fine. Yeah. Let's. Okay, so anyways, ADP, another dumb prediction, again, used in the modeling of non-farm payrolls, and tends to be a pretty good scalp. It's highly related in the last few years to the NFP number, so a bad ADP tends to produce a bad NFP, so that's your first opportunity to start trading today's number. Okay, and there's the press conference. And that you're supposed to study and just see what they're talking about, see how the outlook, see what the governing council's thinking about. Okay. Canadian trade balance, great. U.S. trade balance, great. ISM services, great. What a trading day, man. Just beautiful trading day, huh? There's a day you're not going to sleep. right? Aussie GDP, UK PMI, ECB interest rate decisions, ADP, right? Aussie trade balance, the ECB press conference, Canadian trade balance, US trade balance, ISM services, just like rock star. What a rock star trading day, huh? Make sure you call in sick. If you have a day job, call in sick. Funny. Okay. All right. So let's go on. Keep an eye on the end always. So, okay. More Aussie retail sales. Then the Bank of England wants to make an interest rate decision. Yeah, you might want to pay attention to that. Okay. And then, of course, the MPC statement, the Monetary Policy Committee, right? Versus the Governing Council. So if the Fed has MPC, no, I don't want to get into that. Forget it. So moving on, weekly unemployment claims, not that big of a deal because we're worried about the next thing, right? So, anyways, IV PMI, another big mover for the Canadian dollar. Then Canadian job report, U.S. Job report. So it looks like Thursday and Friday is huge for the Canadian dollar. So maybe you should be looking at the Canadian dollar Tuesday and Wednesday. What do you think? Because everyone's going to be messing around with the euro, right? To start the week. The middle of the week becomes British pound. But it's lopsided here for the Canadian dollar. You're already looking, Oscar? Well, that makes tons of sense. Because there's multiple ways of front running. One is front running an hour before news comes out, and the other one is front running 3 days before it comes out. But anyways, guys, stellar week, just like stellar week. If you have vacation plans, you're going to take the wife and the kids to some resort somewhere, and you're going to like play on the beach or do whatever you want to do. Cancel it. Take pride and satisfaction in the disappointment that your children have. Hey, it's your God-given right as a parent to disappoint your children. It's called revenge. Revel in it. All right. Let's move on to the next commitment of traders report. And then we'll get into some more technical analysis and trade plans, okay? Aight. This is the euro. Okay. Just a slight increase in short positions, and that's what we've been wanting to see. Not much else going on, though. I don't call it dramatic, but look at the dramatic change in price. So why such a dramatic drop in price? Well, very little fight out of the bulls. They're still not in the market. Okay. But boy, the bears are having a good impact, right? There's like no support. There's only resistance. Cool, man. So it still feels this way to me. Okay, the bulls are not fighting back on this one. People are either love to sell euro or they love to buy the dollar. That's what this says to me. Okay, very little net change, but a dramatic drop in price. The market's waiting, man. They're waiting to sell. Okay, the British Pig. Wow, that'd be a great name for a pub, huh? The Great British Pig. Yeah. All right. All right. Shorts declined. Longs declined. Price declined. What does that mean? First of all, volume is down. A lot of people got out. Most importantly, a lot of bulls got out. Is that a change in sentiment? Well, we'll have to pay attention, won't we? So it's sort of inconclusive here. Everybody just got out. The bears got out. There were more bulls than bears, so that's why the price came down. So maybe go neutral for it for a while, right? So this drop here also may just simply be the dollar returning to strength. Is it election related and stuff? Well, maybe, right? Is it going to be a range market? Well, remember there's two components, right? There's pound and there's dollar, or there's pound and there's yen, or there's pound and there's Swissy. So it depends on what you're trading. But this is simply British pound long and short contracts in the United States in dollar terms. So it just tells me, yeah, the market might have gone neutral in British pound, but if the market goes bullish US dollar, then the pound dollar comes down like a ton of brick. But that doesn't mean, pound Swissy is going to come down like a ton of bricks. Okay? Depends on what the other thing on the other side of the trade does. Okay? So we're just talking British pound, not bullish, not bearish. Okay? Yeah. So yen. In terms of dollars, does what? Dramatic increase over the last few weeks in Japanese yen short positions. Okay, and long positions have fallen. Ho, 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 ho! What? Does anyone remember when I said, don't be shocked if this comes down, goes up to 125? And we were way down there like 10 or something? Who remembers that? I don't know, 2 weeks ago? Wow, huh? And this is back when the USD yen was 122. You see the price here? Well, it's gone up in 24 and a half. But look at why. Isn't that wonderful? Dramatic shorts and a small decrease in longs. Woo-hoo-hoo-hoo. Whoa. So, the market's going net short Japanese yen. Perfect. Yeah, Debisa says it went through long consolidation. It happens, right? It tends to happen fiscal year end. Igor says, so yen to be weakest. Well, that's what I said 2 weeks ago. So what does it mean now? Now that we're at 125, does it mean it's going to continue? No. It's just where were you 2 weeks ago? So that could be the end of the trade. No, I hope it trends. we're still, if you're looking at the 4-hour USD yen chart, we're still well above the 21. So, you know, if the velocity is slowing down, where price is moving sideways, waiting for the 21 to catch up. And if it hits it, it might pop up and go to the next level. It doesn't have to. Okay? Just be careful. Just because it's gone up for 2 more weeks, or just because it's gone up for 2 weeks doesn't mean it's going to go up for 2 weeks. Because remember, I'm a bull and I buy red candles in an uptrend. If I'm a bull, I buy red candles in an uptrend. Uptrend being defined as when price is making a series of higher highs and higher lows. So I don't know, plan it out. Okay, but again, where were you 2 weeks ago when we were at like 120 or something like that? And I said, don't be shocked if we're at 125. Well, we just hit 124.50. Okay. Yeah, well, look, when I say 125, and I think I drew it out, I'm like, it could be 125, it could be 127, but then we're going to have to do a lot of these different things. I mean, I'm not picking a price. When I say 125, there's nothing magic about 125. What I'm saying is significantly up. And we had to, you'll put it in the context. To get to 125, we had to make an 8-year high in the market. Now that's bold. No? It's not this one. Yeah, I mean, that's bold, right? Yeah, we're going to make an 8-year high. Not a problem. So, look, 125 isn't the kill zone. What I'm saying is when price was falling, I said nothing fundamentally has changed. So even though we're at 120, don't be shocked if we're at 125 in the near future. And so there's the plan, guys. Let's see how ripper rocking the trade plan was. Buy it down here. It might go up here. Now, we should all look at that and say, oh, all right, well, there's nothing brilliant about that. Yeah, I didn't say it was brilliant. I said you should consider buying it as support in an uptrend. Right? Right? Buy it at support in an uptrend. Everybody got that part? Hey, it's simple, it's basic. Doesn't mean it's less important. Right? It also looks stupid simple now, right? Well, it was stupid simple. Well, look at this. Okay, so let's talk with Mike here. Right? And somebody else asked too, does it mean it'll go higher? All right, well, let's look at it basically. Are we closer to resistance or are we closer to support? Which one are we close to? Resistance. Okay. So if you're a bull, what do you do here? Yeah, nothing. Tibisa says sell scalp. Well, not if I'm a bull. So if you're looking at it's got a gun to your head, you pull the trigger or I pull the trigger, right? All right, so then your only shot would be down. If you had to trade. But, you may not have a fundamental bias that way. If a bull would do this, okay, like this one, you see the break, and then it came back. That's where you buy it. So again, simplify your trading. Very simple things. Are you a bull or a bear? Just pick a team. What's the other thing? Are we at support or are we at resistance? Well, if we're near resistance, you can't buy it. Or you'd be foolish to buy it. Mama didn't raise no fool. Don't embarrass your mama. She doesn't deserve that. Right? 9 hours of labor, and you can't wait for 15 or 20 minutes for a trade to set up. Psh. So anyways, yeah, if you're at resistance, let it break, catch the dip. So there you go. Very, very simple trade plan. So maybe tomorrow. Okay, I digress. Aussie, no change. Okay. The interesting part is at that time, and I remember us talking about it, was the psychological level of 80. You know what happened ever since? You had like 80, let's call this 80, let's call this 70. These are price levels, right? And 78. Okay. The interesting thing about it is it traded so beautifully. It was like a gift. Because what happened was we dropped below, and then we went back to 80. Sell, sell, sell! Then it went below 79. Then came back to 79. Sell, sell, sell! Then it broke below 78. Came back to 78. Sell, sell, sell! I mean, just did that over and over and over and over. 3 pips, man. You could decorate your man cave with those pips. Kiwi. Amazing, huh? How it went from negative to negative again. Yeah. Commodities, right? They're all related. Aussie going down, CAD going down. Why not Kiwi? That's what we see there. Falling tide, right? Lowers all ships. Here's a kitty CAD. And this shows actually an increase in value in the Canadian dollar. Just US dollar is stronger. Maybe that lends us to like a CAD yen. CAD yen long or something, right? You are the one. Let's do some more technical analysis. Only you beneath the moon and under the sun. Until this torment is through. I want to spend my life trading Forex with you. Forex with you. All right, so what is this? CAD yen. So we got the resistance identified. Let's go to a smaller time frame. The CAD, if you just had to, we already have the plan planned out. It would have been very disappointing to see this level break because it's a cluster. The cluster includes the daily central pivot point and the weekly central pivot point. Of course, you would have this fibbed as well. This was all a glorious place for it to go up. But it ain't going up. So a big flag here that says, you know, take a break, I think. Okay. But I don't think USD CAD's going down. So if you had to buy CAD, maybe CAD yen going up like we have it planned. So notice we're supposed to be buyers down here, you see? If you decide you want to buy this pair, you have to decide where you want to buy it. So the trade plan was buy it down low, have it break the previous highs, let it come down, okay? Because once you make a higher high, you got yourself a confirmed uptrend, and what do you do if you're a bull? When you're in an uptrend, you buy red candles. So it turns red, falls for a few hours or a day, and then you drive it up to the next level. Is that likely to happen? Probably not. It had a chance, had a micro chance, but you know, but we know at the end of the week we have a lot of CAD news, right? So what if things in Canada are less bad, dare I say, nay, improved in Canada? Well, the CAD yen goes up. Then it begs the other question is, do you think and could you support the theory of better news out of Canada? Maybe this year will last. Is there something you could support that? Well, do it. Don't do it for me. It's called a trade plan. What would you look at? Commodity prices? Sure. What about when, you know, what's the finance minister of Canada's talking about these days? What's the Bank of Canada talking about these days? What are some of the economic indicators? Well, you know, what's the trend in jobs report? What's the trend in CPI? Just in the last like 3 months, is it going up? Is it going down? Or, you know, yeah, just like, I don't know, do some work. Gee whiz. I want to be a millionaire, but I don't want to have to work for it. Yeah, good luck with that. All right, so anyways, get into it. We know the news isn't coming out till the end of the week. So maybe the CAD's weak for now, but strong later. Is that possible? What if the Canadian dollar is weak for the next 2 days? What are you going to do on Wednesday if we're at support? Right? Isn't that what we do? Isn't that how we roll, yo? I don't want to sell US dollars, so find something to sell. All of a sudden I'm like, how about yen? Aight. So identify your levels of support. You know, look at this cluster here. It's the same price. This monthly pivot is the same as the weekly pivot. It looks like it was previous support, and you know, I don't know, something's going on at that price level. It's not the world's greatest, but we're not looking for glory. I'm just looking for a reversal pattern. Yeah, down to 99 and buy. Yeah, okay, there you go. That kind of sounds like a plan. But by what? By a reversal pattern that occurs at 99. And if that don't happen, let's try again at 98 or 98.50. 98 would be better than 98.50. It's actually like 98.20. So like, how about monthly support 1, weekly M1? So what if this thing just drops for 2 days, just drops all the way down to the M1? Yeah, then in here, I'm going to be looking for reversal patterns on smaller time frames, not a reversal pattern on the 4-hour, but how about a 15-minute, where the 15-minute goes, and then it gets caught here overnight, and then does this, and then boom, long and gone, my friend. And then the oscillator down here does that, and yeah, first target here, and then pray for the break here. Easy peasy lemon squeezy, right? You guys want to trade the news with me? We have personal income and spending. All right. Anything for you? Thank you for being a client of TradersWay. We love you. I love you. You're my sweet baby. All right, so personal consumption expenditures and stuff. Obviously, we want to see people spending money, right? Mark always gets a bad feeling when I kiss him on the cheek. Come on, Mark. Ken says, thanks. Last week's FX Street session was really good. Well, I got more. Guys. I got like just this fat brain of Forex. And I'm willing to share. And maybe it's just, I've been doing this for so long that, I did that 5 years ago or 6 years ago or 2 years ago. Who knows? And maybe it's time to do it again, But I'm here, man. So we'll keep following that up. I don't know what's new, right?
.4% personal spending, 1/10 higher, flat in personal spending, 2/10 below. Later, 0.0%, 1/10 below. Year over year, 0.1%, a tenth below. Core, 0.1%, a tenth below. And core year over year, 1.2%, a tenth below. So all the deflator numbers, a tenth below consensus expectations. Income at 0.4%, a tenth higher, but personal spending at 0.0%, 2/10 below consensus. There was a back month revision higher to personal spending, 1/10 higher to 0.5%. And real personal spending at 0.0% versus 0.1% expected. Also saw an uptick in the savings rate, personal savings rate of 5.6% versus 5.3% prior.
I like that revision. There's a couple of interesting things. Are you there? Can you hear me? There we go. All right. All right. Some interesting things there. So people are making some money, right? Their income has gone up. Can you imagine your boss coming in and say, "Hey, thanks for working, nights and weekends. We're going to give you a raise of 0.1%." Oh my gosh, that's like $50. It's so good. And we'll take you out for lunch. Yeah, we're going to Applebee's. Oh, thank you, thank you. I just love it. I get a free lunch. Did you just miss having a job? How pathetic. All right. So, anyways, people are making a little bit more money, but they're also saving a significant amount of it. Saving it. We're talking about America, right? We're talking about America. Americans don't save their money. But it went from 5.2% to 5.6%. That's pretty dramatic. So what do? You sell Visa stocks or something, right? Why aren't they spending it? Interesting. Prior personal spending was revised up, so I was hoping to see a little more dollar strength out of the news, but no. Because it was 0.4, but they revised it up to 0.5. Okay, pretty interesting. And PCE, a little disappointing on the core. Yeah. Yeah, saving for the iPhone, right? Yeah. So, but not a dramatic, but so year over year, 1.2 versus 1.3. Remember, the Fed prefers PCE over like GDP, So that's a miss. There's no reason to raise interest rates. That's what that says. And so that's why you're not getting dollar strength. Okay. By the way, I had a meditation yesterday, and then I did maybe an hour worth of research to follow up my thought. So this isn't a sales pitch. I'm going to ask you a question. Okay. Let's say for about 3,000 US dollars. Remember, this is just a thought. This is not a promise. It's not a price. It's not a sales pitch. I'm just wondering. Let's say it costs 3,000 bucks, and you had to buy an airline ticket on top of that. Would you be interested in coming out to the United States, hanging out with me, and we do like a 4-day tour across the United States? The first day, we meet up at a 5-star hotel, which is and meet in the exact room that J.P. Morgan and all his friends from Wall Street created the Federal Reserve in the exact room that the Fed, just imagine a bunch of boys sitting around drinking bourbon and smoking cigars, and they said, you know what, we just got through the 1907 financial crisis. J.P. Morgan, you saved us. You know what we need? We need a central bank. And they actually sat down and designed in that room. Then the next day you find yourself in Washington, D.C., and we get a tour of the Board of Governors building. And we also go pay a visit to the IMF and the World Bank and get tours in Washington, D.C. We'll go see the White House if we have time. Spend another night in another 5-star hotel. And then the next day you find yourself in New York City, downtown New York City, and we go visit the New York Fed. Stay in another 5-star hotel, have some more dinner, more drinks, more cigars, and then you fly home. And I'm guessing $3,000 for travel expenses, hotel expenses, and food expenses all taken care of. So yeah, you'll fly into Florida and you'll leave New York. And all the way you get to see the United States of America. So I'm guessing it's $3,000. I only travel for 5 stars, so that's how it's going to be. You could do it cheaper, but not with me. So, seriously, I just thought it'd be cool. I'm like, hey, why don't we do all of that? Just like a 4-day Forex trader kind of mini vacation. You could write it off in your taxes as as some sort of business expense. So I'm thinking like the second week of August. Just a thought. I don't know. Because I want to be back on trade. Third week of August is set for trading, so I can't do it the third week. So maybe it's the first or second week of August or something. You know, I don't know. We do non-farm payrolls, and then we go to Jekyll Island. Yeah. Okay. So, you know, bring it up if you're actually interested, because I've already basically looked at all the costs and stuff, and I have it in my head what to do. I just have to arrange for tours, because we'd want to be behind-the-scenes tour of the Board of Governors building, right? The behind-the-scenes tour of the IMF, the behind-the-scenes tour of the New York Fed and the World Bank, and right? And while we're in the Federal Reserve Room on Jekyll Island, I'll do like an hour and a half presentation on the Fed and stuff like that. Anyways, just a thought. All right, so there's that range. So that's how you trade it, just the way we talked. And I've still got my eyes on yeah, so the PCE, the miss on PCE just tells the Fed not to raise interest rates. So that's going to be disappointing for stupid people. Well, yeah, YJ, I think it'd just be a lot of like cocktails and cigars and steak dinners and 1 hour of education. Wow, that's not true, because every time we get a tour, right? Plus, you get pictures of being at the gates of the White House. I don't know if I want to do a White House tour, but whatever, right? You know, it's a Fed tour, right? Let's talk about Fed, baby. Let's talk about you and me. Let's talk about all the good things, right? So, yeah, let's get her picture taken with, like, if not Yellen, with Grandma Yellen, I don't know, we'll find Wheeler or somebody. We'll find someone in the hall. You know, because, you know, look, if I made the arrangement, say, look, there's 20 of us, we're all economists, someone's going to meet us, I'll tell you. I'll just say, look, I'll put your picture on my blog. It'll be great. Serious, I think that's the only time, you know, like I said, the last half of August, that's dedicated to trading. So it'd have to be the first or second week of August. And then I don't have free time again till never. Seriously, because then I'm like, well, then August, September, October, November is all trading. Then I got Thanksgiving, which is family. And then December is year-end process, and then the end of December is Christmas. And then I'm going to be at Harvard throughout January, so I'm going to be busy then. And then February, March, April, again, all dedicated to trading. I mean, it's like it's the first or second week of August, or probably never happen. Next year, I don't know. Next year, who knows? We'll probably be hit by an asteroid or something by then. So who cares about next year? All right, so this is gold, and we're just moving. We've gone from the top of the range. We're getting close to the bottom of the range. Could you start thinking about buying gold? Yeah, you know, if you're a bull, as you know, I'm not a bull, but you know, you could definitely. I would want it to come down a little bit more, like have a bearish week this week. Yeah, then you might be buying this way. And the interesting thing about that could mean Euro USD up. So we got to keep our eyes on that prize. Okay, but if you're, you know, let's reverse the whole thing. Are we closer to support or resistance? We're closer to support. Well, then you can't, you know, on like a 4-hour chart, you shouldn't be selling this. So on a smaller time, you should be looking for reversal patterns. And, you know, it could come down a little bit more in here. That's fine. But, you know, we touched last week the exact line. So I would start looking for in here reversal patterns to buy it up like a slingshot. Okay. Next year, August? No. What is it, June 1st? No, like coming up. Look, right? Add a little time, add a little bit of money, it can be done. If you want to go, you can make it happen. So I think if we can get 10 to 12 people together, boom, we'll have a great time. It's a big deal, right? Oil, as you know, we want it to go up off the 55. The 55 suggests failure at the high and then down. Okay. You know, you could get one of these things, but this is where I would predict like a 50% and then drop. Okay. But we'll see. This is technical analysis in a fundamental trade, so you got to be careful. Okay. What I'm suggesting here is fractal oil keeps us down, right? Oil fracting doesn't necessarily bring it down, but prevents it from going up. Peak oil, by the way, is today. Did you know that? June 1st is peak oil. Now, it might have changed, but I remember about 5 years ago, or 5 years ago, probably 8 years ago, I grabbed data going back 25 years from the Department of Energy and found that on average, June 1st was when oil inventories were at their highest. So really, oil is supposed to be cheapest today. Okay? And then throughout the summer, we draw those inventories down, which means less and less oil available, but demand is still constant, so prices go up. Well, all right, so maybe we'll pay attention to that. But the thing is, it used to be a very slow process to add more oil and build supplies up. Now it's a very quick supply. So what happened 5 years ago is different than what happens today. Okay, but June 1st, I'm a buyer of oil. Yes, Igor is right. OPEC has said that they're not going to, at their next meeting, they're going to keep supply constant. Okay. What else should I cover today? S&P 500. Okay. Recall previously, this had to go up. This is our LMO. I suggested this just has to go up. We have to get above this, and we did for a while. Now we're down here. Same sort of thing, guys. We need this to go up. Okay? And the theory is more people benefit from the stock market going up than down. So everybody wants that to go up. It's just, you know, I don't know, but pay attention to the channel. You know, if anything, I would rather it move sideways all summer than come down, because it just makes the technicals a little more complicated, a little too complicated. I'd just rather not. But like I've always said, it doesn't give two hoots about what I want, right? Let's adjust the fibs maybe, but you know, we didn't quite hit the top of the channel, but you can see this 50% held perfectly. Now we're kicking off the 3A2, so you know, it'd be great if we're basically in a micro channel now this way for a while, but just down is not good. How about that? And okay, it's been about 75 minutes, so long day. Good trading, good week, man. I'll be here every single You're welcome to join me. 7:30 in the morning. It's 2 hours before the New York Open. I'm also writing an article right now on how to prepare for and trade the non-farm payrolls report. So that's what I do on my weekend. I've sat down twice now and spent maybe an hour at each sitting writing this report for people that don't know how to trade non-farm payrolls. I don't know why I do it, but I do it. So peace on earth, may the pit be with you, may your profits be above average. You're going to see YouTube in a few seconds. That means, you know, let me know that you care. Go on to the last video posted, which was probably Thursday, and leave a comment there. And then probably within the hour, today's video will be available on youtube.com/c/TradersWay. Thank you for being on my team, guys. Thank you for being a client of TradersWay. We're trying to earn your loyalty so that when you feel confident enough to start trading real money, you'll choose TradersWay as your broker and as your long-term business partner. Cheers.